Hello everyone, welcome to Just Invest Today, and today we have to talk about Alibaba. We're going to talk about Thomas Russo. He did an Alibaba kind of update, stock analysis on Alibaba and what's going on in the market. So we're going to review his thoughts on Alibaba. And we have to understand, Thomas Russo is like a professional investor. He has done pretty good, kind of beating the market only by like what 3-4%, which is not bad over like a span of like 30 years, right? If you could do that over a span of 30 years, it's not too bad. But he's well respected and he has a concentrated portfolio of well-rounded stocks. So let's even look at his portfolio and see what kind of value investor Thomas is. So look at this. Thomas has Berkshire. He has Look at his concentrated portfolio of Berkshire, MasterCard, and Nestle, Google. Those are his four top performing stocks with the most concentration. And when you think about these, those are pretty well-rounded stocks if you think about it. And Berkshire Hathaway, Nestle, and MasterCard, I think he's held them for like 20 plus years already. So you already know he's a long-term focused investor. And he just added Alibaba in this quarter too, right? Alibaba, he upped it 30%. So I won't be surprised if he added more Alibaba. But we're going to see his take on the whole Alibaba situation. And this is going to be basically a stock analysis review, see what's going on with the company. Can you like this video, subscribe to my channel? I'm on the road to 1,000 subscribers. Can you help me out? Thank you. I'm going to provide so much good content for you guys, man. So Thomas Russo invested in Alibaba like around 8 months ago, and I guess like everyone else had bad timing because the government cracked down harder on Alibaba, but it is what it is. No one could have predicted what was going to happen or how hard it was going to be hit. I think he already lost 25% on his original investment, but he still sees this as a big opportunity to invest in Alibaba. So let's go through some of the important key parts of his little article that he wrote in his shareholder letter. So Alibaba has long provided exposure to China's foremost commerce hubs, especially through the form of Taobao and Tmall. With roughly 1 billion Chinese average annual consumers and roughly 260 million additional consumers outside of China, it is hard to imagine shopping in China without involvement in one manner or another with Alibaba. Alibaba's focus on serving the needs of both merchants and consumers alike has allowed it to deliver its e-commerce at amongst the low take rate of any leading retailers. Alibaba also provides investors access to China's leading cloud business. Alibaba, in efforts to be transparent, has reported its cloud segment separately since 2017. And this is the key thing I want to get into. The fundamentals of Alibaba's key business will continue to grow and grow and grow. Like, are people going to stop buying from Tmall and Tmall, like these huge commerce platforms that are like pretty much essential in China right now? Like, those are going to keep growing. Like, whatever regulatory overhang comes up, the fundamentals of the business is still going to be strong. E-commerce is still going to grow. The cloud business is still going to grow. People are going to need more and more and more cloud services. It's just inevitable. It's going to happen. The key proponents of the Alibaba business will grow no matter kind of like the overhang of the government, in my opinion. By reporting cloud results separately, Alibaba allows investors to measure the substantial extent to which Alibaba has exercised both the capacity to reinvest as well as Alibaba's management's capacity to suffer. And this is so key to Alibaba's success. The capacity to suffer. Thomas Russo goes over this kind of a lot in this article or in his shareholder letter. The ability to keep reinvesting your money that you make from your primary business and your investment in different segments that are honestly losing money at the time. But the capacity of these businesses to generate crazy net income to the bottom line in 5 to 10 years from now is going to pay dividends long term. And that's what he talks about with the capacity to suffer. And that's what Alibaba is all about. Suffering in the short term with the cloud business still losing money, with all of these side investments still losing money. But 5-10 years from now, those are going to be probably better segments of the business. The cloud business is growing at like 30-45%, and they lost one of their biggest customers, TikTok, right? So they lose one of their biggest customers TikTok, they're still growing at 20-30%. So what happens when more businesses pop up in China, more businesses need the cloud, and Alibaba is basically leading in cloud. You see the growth of the segment, and it's not even Alibaba cloud is not even 1% of the market right now. So around 1% of like the market compared to like AWS and Amazon and stuff like that. So you really see the potential for cloud to go crazy right now, and that's how Jack Ma set up his company. So that's what he's talking about basically in this article. Then he gets into Ant Financial's valuation declined sharply over ensuing months as efforts to embrace safer financial capital requirements weighed heavily on the near-term reported results. Alibaba was valued at a modest multiple EV/EBITDA of just over 10 times, quite modest considering the ability the company possessed to reinvest its current mature segment free cash flow into new regions and into new product service extensions. We also agreed internally that we would keep the position weighting relatively modest between 2.5% and 3.0%. We recognized back in late November that the autocratic moves available to China's Communist Party ahead of People's Liberation Army were vast, required no public authorization to exercise. So this is what you guys got to do. You have to be cognizant of that. Weight your portfolio the way you see Alibaba and how risky it is to you. If you see it as a no-go, like you just can't invest, you don't understand it, you don't know where it's going to go, don't put anything in it. If you think it has good potential, but you still say there's a lot of risk, weight it lower, weight it 5%, maybe lower, whatever you feel comfortable with. But then there's other people like me, I have over like 20-25% heavy into Alibaba because I believe all of this is just FUD. And people are just scared right now, and that's going to climb right back up because the core foundation of Alibaba e-commerce is going to grow. It's inevitable. It's going to grow. So that's how I'm thinking about Alibaba, right? So I described to investors late last year my thought process of investing in a company's shares would possess multiple business gems that serve in many instances as only way that consumers could obtain such good services, even though such businesses confronted political, economic, and regulatory headwinds. Yep, and there's a lot of that. There's the threat of delisting in the US, and then there's the VIE structure that people are scared about. There's a lot of things that people are scared about, which is a good argument to make that this could all be potential benefits or negatives to what's going on with Alibaba, but you have to weigh that out and see what side of the fence you're on, basically. And I made a video on that. What side of the fence are you on? Now he's going to talk about all the headwinds and risks what comes with Alibaba. So many of the demands the president and his associates have levied have served as disinfectants designed to combat toxic risk that have been risen over decades of business misconduct. The government has set in motion steps which, if complied with, will in many instances make Alibaba's long-term business run more smoothly once the dust settles. Below are some ideas as to how the disinfectant, even though autocratically delivered, may ultimately lead to more healthy business practices. And I've been saying this, like at the end of the day, this can serve as actually a positive if you really look at it that way. You can look at it in a negative way, or you can look at it as a positive way. All these things are going to make Alibaba's business stronger, where people are saying Alibaba might have to will be allowed to actually perform on Tencent's business WeChat, which will grow Alibaba like crazy. Getting rid of all these bad products on the market that are destroying the IP of products. So Taobao, Tmall is going to have stronger product selection and going to be trusted more, like stuff like that. And financial whole situation with all the bad loans. So now they're going to have good loans. There's not going to be any threat of like a market crash or people not being able to pay back their loans that they got from Ant Financial. So that could be a positive moving forward, because they have to actually be a financial holding company instead of just like one of those private lenders that's able to lend out crazy amount of money without any regulation. So that has negative effects if anything were to happen negatively about that. They have data security. Everyone's doing data security right now. US, Europe, everyone has strong laws when it comes to that. Asia, China had no laws when it came to that. So now they're putting in heavy data security laws. Every government system has that, is doing that, but now it's catching up with China. So now they're putting in regulations, and everyone thinks that as like some really bad thing, and only China's done it. Well, everyone has been doing it, and then they had to choose one from two, which was a bad policy, forcing people to only be on Alibaba, or you can't go to the other places. So all these business practices that are getting left out the dust and left behind, those can provide good opportunities for Alibaba moving forward. Decrease war on counterfeit. The war on counterfeit involves ongoing battles that should allow Alibaba to compete more effectively. Once there are fewer available lowest price counterfeits in the market, Alibaba business is based on merchant taking on enormous responsibilities for the authenticity of products. Ultimately, there will be ongoing steps from government to reform that will lead to more economic logistics and more robust inspection to ensure that the consumer receives authentic goods and services. So you can see this can be a positive moving forward with Alibaba. Alibaba has exposure both through directly owned divisions and through their 100+ portfolio of venture-funded startup businesses. As the leader in so many of its businesses, it is our belief that the disinfected that presently is being administered to the China's businesses, social networks, political networks will eventually result in a world wherein the clear market leaders like Alibaba will eventually go from strength to strength as business practices become more fair, less cutthroat, competitive. We are going through a period when headline risk drives share price, and this is the biggest thing right now. Headline risk is that's all Alibaba is. Headline after headline after headline. That's why Alibaba is just crashing, because they're just regurgitating the same sentiment over and over again. They're taking articles from the past, bringing it back to the future, or twisting the government's words, using this and that, even though the government is saying, no, calm down, it's not like that. For example, Wall Street Journal, the Financial Times recently reported that SoftBank, a global leader in Chinese fintech investing, has recently decided to cut additional investments into China tech market until Chinese technology sector calms. There is nonetheless undoubtedly systematic selling by global shareholders to eliminate evidence from their portfolio reports of Alibaba's recent underperformance. We believe, however, that Alibaba will financially recover from the near-term disruptions and once again evidence the extremely crucial role that Alibaba has long played in Chinese commerce. I believe that this is to be the case given the following advantages it possesses: the financial strength of Alibaba, its dominance in commerce platforms that continue to be indispensable for the manufacturers and merchants, its commitment to invest heavily in new ventures even when such investments cause near-term results to suffer, its robust and fast-growing cloud business, and its prospects for enhanced business practices that I believe will arise from many of the very same reforms that are being poorly received by equity investors today. He basically goes on to saying that Alibaba actually increases its buybacks, so that's huge because it has a huge cash pile, like $72 billion. So it increases buybacks for Alibaba, which is going to help with the share price because it's getting an undervalued stock. And he's saying that if anything changes in Alibaba, he's willing to sell out of it. So basically, that's Thomas Russo's perspective on Alibaba and what's going on. Tell me what you think. Do you think all these headlines are driving Alibaba's stock price? Do you think Alibaba can recover? Do you see the negative sentiment, like just not leaving Alibaba? So the VIE structure, the regulatory overhang, China's going to be increasing more regulatory stuff on different companies. Is that just going to last for 2-3 years going forward, moving into the future? What are your thoughts on Alibaba? Tell me, leave a comment below. Like this video, subscribe to my channel, and I'll get back to you in the next video. Peace!